It's like our newsletter. So I'm just gonna kind of base my thing today on the newsletter. Just kind of going over some different things. But my name's Marquita Brody. I work for Judy Sinz, CPA, as a staff accountant, and I have been with Judy since 2002, so 17 years.
Awesome.
Judy started the business back in 1998 when she was working in private industry, and she was a controller for a radio station, but she wanted to do something to help more like people looking for tax accountants, tax help, more where they felt comfortable coming to her, they could reach her anytime, you know, kind of reasonable prices, didn't break them. So that's why she started her own public kind of firm. And immediately she got pretty big. We started working out of her house in Ballantrae, and I think within a year or so we moved to Old Shackle, and then we moved to where we are now at Walton Ferry. So now there's Judy, who's CPA me, and then we've got 3 bookkeepers. And we're hopefully going to add another accountant because Judy is trying to phase herself out of the business because she's, I think, mid-60s, and her husband's retired, and she's ready to kind of just, the next couple years, get herself out of it. So yeah, we've grown quite a bit, and our focus is businesses, small businesses, individuals, taxes, bookkeeping. We do contract license. We do reviewed financial statements for people, QuickBooks training, pretty much any kind of accounting needs you have. But we primarily focus on smaller businesses and individuals. But so really a good referral for us is just anybody that's looking for accounting services, and we can help them because we try to make, since we have 5 people there right now, we try to make somebody in the office from at least 8 to 5 every day. So when you call, you don't get a voicemail, and so at least you can talk to somebody, whether it be one of the bookkeepers, the lady that answers the phone, or Judy or I. So that's kind of what our focus is. But some of the things I was going to go over is our newsletter that we send out monthly. And one of the first things it talks about is like amending a tax return. I don't know if y'all ever had to do that or not, but usually it's when somebody's received like a 1099 that they didn't include, or like a W-2 that wasn't included on their tax return. But some of the things about amended tax returns is you don't file one if it's like a mathematical error that you would on your tax return, because the IRS will kind of fix that themselves and send you a notice and say, hey, there was an error either in your favor or not, you know. All amended tax returns have to be mailed. You can't e-file those, and of course they've started taking longer and longer to process, where it could be up to like 10 to 12 weeks now, maybe longer. But so if you get a refund, expect, it actually says up to 16 weeks to process the return. But they do now, in the last year or so, you can actually go online and check on it, like check your amended return. So that's a good thing. But you must file the 1040X, the amended return, within 3 years from the date you filed your original tax return. And then the last day you cannot claim a refund in the last after 3 years. So say we had a guy that had filed returns since 2010, so he was only able to go back and get his refund for the 3 years prior. So you kind of just lose that money if you actually were owed a refund. The next thing is talking about people that rent out part of their home or their home for like Airbnb. If you do Lyft, Uber, sell stuff on Etsy, then a lot of people don't realize, I guess, that those places send you a 1099 or a 1099K at the end of the year for like Uber or Lyft. But you have to realize that that's going to be taxable income, so it's going to be taxed at your tax rate plus, you know, whatever your other income is. And then the good thing is, though, you do have deductions as far as that goes. So say you're renting out your house, Airbnb, you can take part of the utilities, part, you know, of the insurance, you know, property tax, mortgage interest, all that stuff. But a lot of people just don't realize, I think, that they have to put that on there, kind of like a side job, you know, where you're just bringing in money. But they do send you something at the end of the year. And we've had also people like that who get something and they've already filed their tax return, so they have to go back and amend it and do all that. One of the things, though, is if you rent your home, a part of your house for less than 15 days, you do not have to file it on your tax return. So that's another thing if you've got like a vacation home or something, or, you know, that kind of thing. One of the next things is talking about just keeping records during the year. So you don't, at the end of the year, kind of play catch up where we have people that's like, well, I need to get my stuff in here, but I've got like a whole year of stuff to enter into QuickBooks, you know. So they'll put a whole year's worth of stuff in like a day or two. So just the importance of keeping like your records up to date throughout this year as far as receipts. And the thing is, the IRS doesn't really care how you keep it, whether it's Excel spreadsheet, QuickBooks, you know, just like a ledger sheet. But if they ever come to audit you, you're responsible for providing them the information that they're looking for to back up what your numbers are on your tax return. So you should keep all that stuff for 3 years, and then tax returns you're supposed to really keep for as long as you can, but they can only come back 3 years on you as far as receipts, that kind of thing. But the way that people use like debit cards and credit cards these days, you can really just use like your statements and go that way, but really the cash stuff is where you kind of get caught as far as keeping those receipts and stuff. So that's just, you can remember throughout the year instead of scrounging at the end of the year to get all that stuff together. Keeps you from spending a lot of time doing that. And the next thing is just different forms of businesses. And most of you guys probably know about, like, sole proprietors are the most common and the easiest because you don't really have to go through the Secretary of State and get like a charter and everything. So, and you just report that on your 1040, the Schedule C, so it's not a separate tax return. You have like partnerships, which LLCs, S corps, and C corps, and there's two types where the taxation goes through the entity itself, so like a C corporation, or you have partnerships or S corps where they're pass-through entities, and they're not taxed with the actual entity, but they pass through to the owner and go on their personal tax return. So that's something if you're thinking about getting, you know, starting a new business, that kind of thing, that you kind of think about that. But the only one that you don't really have to do a separate tax return is the sole proprietorship and then a single member LLC. You can report that on a Schedule C also. So.
And what was the tax rule that the Trump administration did last year on certain pass-through entities? Isn't there like a reduced tax rate?
The tax rate went down to 15% for C corporations. So to make it fair for the pass-through entities, they gave the 20% tax deduction, which was on your personal. So say you had a $20,000 gain from a LLC, like a K1, when you bring that over on your tax return, you would get a 20% tax deduction on that. Of course, there was some, like if you made over $300 and something thousand, then it started phasing out. Then if you were in that 300,000 to 400, I forget the exact number, then you had to consider how much W-2 wages you had, like how much depreciable assets you had, and it kind of phased out. But if you stayed below like that 310,000 for married filing jointly, I forget what the single was, then you were fine, like you just got the 20% tax deduction. But that was kind of make it fair for those that were pass-through entities. So.
I like it when tax code's fair.
Yeah.
Fair is not a word you use very often.
But yeah, if you're doing like Uber or Lyft or any of that stuff, the easiest one to do would be the sole proprietorship for that
Schedule
kind
C.
of stuff. Yeah. The only time you really want to think about, not only time, but a corporation or LLC is if you feel like there's a liability issue as far as if somebody's driving your vehicle, if you've got people like on your property, that kind of thing. But if you're just selling stuff on Etsy and stuff, you really don't have a liability issue as far as that goes. So that's kind of basically what we tell people that are looking for what kind of entity they want to go into. Let's see. This kind of goes into kids. If y'all have any kids with summer job students and just helping them fill like a W-4, and they realize that they have withholdings on their W-2 and stuff, and then I think it's if they make under, is it $12,000? They pretty much get all their money back if it's any withholding, federal withholding at the end of the year.
Even if you claim them as a dependent?
Yeah. So we have some where they have 0 withholding, so it's not even worth filing the return. And then if some have a couple hundred, of course, they're like, woo-hoo-hoo, so they get that back. But you can still claim it as a dependent, and then they can also claim their own. But yeah, if it's
So when they're that young and they don't make, obviously if you're not gonna make $12,000 a year, are you saying when they fill out the W-4 or if the parents help them fill it out, they actually could withhold 0 in federal income tax? Okay.
Yeah.
They're gonna get it all back.
Yeah.
Okay, I got you.
I have a niece that's
Social
17.
Security and Medicare is gone.
Well, they're gonna get that.
They're getting some.
They're gonna take it out no matter what.
Hopefully, yeah.
Yeah, because that's just, that's part of living here.
I have a niece who, she works at Slim Chickens, and she came and she brought me her W-2, and she had made like $2,000, and they withheld like $12, you know. Well, she was reading like the Social Security part, you know, and she was like, here's my W-2, you know, and I was like, well, you get $12 back, and she's like, $12? Yeah, that's all you really have withheld. And she's like, oh, okay.
It's $100 to make a return, so you owe me 88.
Right, it's a letdown, for sure. And that's a hard lesson to learn when they're.
But since they had doubled the standard deduction, since it's like $12,000 for individual, single, you can make up to that and still get back pretty much everything you had withheld all year. So that was a good thing as far as that goes. But I think that's about it. And then this just talks about QuickBooks and different things. And then on the back is just some tax dates that's kind of all passed by, but just estimated tax payments. I don't know if you guys do a lot of those and stuff, but the next one is due in September, so September 15th will be the third estimated tax payments that's due. But as far as that goes, yeah, if you know anybody looking for accounting services, bookkeeping services, just send them our way. We can help them out. Do y'all have any questions?
Awesome.
I got a question.
Yeah.
We have now, you know, with the new tax things, we can't do our deductions. I mean, it's,
Yeah.
you know,
We have
So we
really,
had to
there's not a lot
pay
that, yeah.
for the first time in a long time.
Really?
And it was quite a bit, so I was trying to figure out, and I do married, 0. So what would you suggest? Should I just put extra
That's what I
or
would
pay
suggest.
like an additional?
Oh, you could put extra withholding on your W-4, or you could just put aside an amount in like a savings account
and just
where
pay
you're
it at the end of the year.
Yeah, and at least if you're good about that, then that's the best thing to do,
Yeah.
because they're not really making interest on your money,
Right.
you know, and you're
Yeah.
kinda got it there just in case something
I just
happens.
want to break even. I can't figure out how to do it.
Another big thing a lot of people don't realize is the IRS is pretty good about installment agreements. Say if all of a sudden you had something happen and you made all kinds of money and you just didn't realize the tax implication of it, they will work with you as far as an installment agreement. Now there are penalties and interest, which I think the penalty is 0.5% a month.
I think it's pretty high.
Yeah, and the interest is about 6%. But if there's no other thing you can really do, then they're pretty good about working with you on that. Now, that takes some time too. We had a lady that filled out one in September, and I don't think she got an answer until like February or March. So but I think that maybe the shutdown kind of pushed all that stuff back. But we had a couple that owned a HVAC company, and they owed like $25,000 in taxes. And the lady that did their tax return told them, you have to pay this, you have to figure out how to pay this, like, right now. And I was like, so they went out and got one of these loans where they charge you like daily or
no.
weekly, just outrageous
Oh my
interest
gosh.
rates. And I said, she never told you that you could do
Do
an
an
installment
installment?
agreement? And they go, no. And I was like, it's way better than what you're doing. I mean, it's not the
Right.
best,
Yeah.
but this was like 25-30% interest on this. And they've got it paid off, but I was like, that's crazy. She never even mentioned it to them, so. But if you work with them and communicate with them, they won't come and take your house or anything.
so how do you get signed up, I'm sure it's easy, how do you get signed up for the newsletter?
The newsletter, just go to our website, which is sinzcpa.com, kind
Okay.
of at the bottom, and then right on the front page, it'll say to receive our newsletter, and you just put your email address in there, and then it'll send it to you every month, so. It's got some pretty helpful things, some of it's kind of, but, you know, like some of it's,
And you touched on this, but from time to time, we see people that haven't filed their tax returns in quite some time.
Oh, wow.
And, we got a situation right now where the wife, who is like, she's retired, she's like 70 years old, she's never filed for her Social Security.
yeah.
And she's afraid to file for her Social Security because they haven't filed taxes. Her
Some people
her
have a
husband,
filing requirement though, when you get
yeah,
to that age.
her husband, ironically enough, was self-employed for a long time.
Oh, yeah.
So I think that they're worried that they might owe, you know, a
Yeah.
lot. But I think, and you can correct me, but when you turn 62, you know, you can file for Social Security, but then if you file for Social Security, when you know, once you
Before
reach 70,
age, yeah.
or, for instance, once you file, they actually will retro the Social Security all the way back to when you would be eligible to receive it, am I right?
No, but you get a higher rate.
Yeah,
No,
you
I
get
think that's
more.
disability.
Yeah.
If you file
Oh,
disability,
disability
that's
you can.
disability, yeah.
retro, okay, all right, so basically the question is this, so if they are basically telling us that they haven't filed, and obviously they wanna get a loan also, that's why this has come up. What's the time frame where you tell people, okay, look, if you haven't filed to this date, you're gonna at least have to file, is it the most recent 3, do you have to go back 5 years?
You have to go back as far as I think that they haven't filed.
Oh,
Now,
my
have they
God.
gotten any notices in the mail or anything?
Apparently not.
Yeah,
But I mean, honestly, we've seen people that have said, I haven't filed,
yeah.
and the reason
I
I
mean, I
haven't
guess if
filed
they
is
don't
because I
have any
haven't been
reported
notified.
income, then it
Oh,
wouldn't
that'd
really
be
matter.
Scared to death if I
Yeah.
hadn't filed my taxes.
Usually when you
Needless
see
to
your picture
say-
in the post office, you know.
But if they've had 1099s reported, if they haven't had anything to report of the IRS's income, then
Right.
they really don't have to worry about it. That's why I was wondering if they've gotten notices.
Well, to make matters worse, so they own they own real property, so they own a house together. And then she has inherited her mom's house. And so her sibling, who is also trying to sell the house, is really, really worried. I wish Brad was here today, so we could get some advice from him too, but they're really worried that if they try to go to closing on this house, they're probably gonna find out that she's got a tax lien. You know, they haven't figured that part out yet.
There's a tax lien on that.
So I'll just, I'll pass that information along, but basically,
Yeah.
if you haven't filed for, let's just say, 5 years or more, you're gonna have to
Yeah.
file.
Yeah, we had
All of
that guy
them?
that hadn't filed since 2010, 2009, so we had to do every one of them.
Okay.
Now, he was self-employed and he had enough deductions, he went
Right.
back, that he didn't owe a lot, and he had some refunds that kinda made up for some of the money he owed, so he kinda got lucky, but he never received a notice, but he also had moved from Chicago to here, so I don't even know if they knew really what his address was.
Right. Yeah, we've always heard eventually they will get around to you.
Yeah.
I mean, they just, you know, it takes them a long time.
I had a lady during the government shutdown, and they were trying to buy this house, and they were dead set on this house, and the mortgage people wanted their tax return, and I told her, I said, well, e-filing season doesn't start till the end of January, and this is middle of January, and she goes, okay, well, should we just mail it in? I said, well, I don't think that's gonna help you, because they're just not even like filing tax returns. So she said, okay, the day of, we'll file it, and then she calls me, we've got it all ready, we're ready to file it. She goes, well, a couple of weeks ago, I mailed an amended return for last year, and I go, oh my gosh. It's like the government shut down. It takes like up to 12 whatever
Oh my
weeks. I was like,
goodness.
I don't know what to tell you, but I said that's not going to happen in the
Right.
next week or two. So.
Anybody, any other questions for Smokey?
Okay, so.
Awesome, we appreciate it.
Oh, I do have a question.
Yeah.
This is what I was gonna ask. When you draw Social Security, you know, say you're retired and you're 69 or whatever, and you wait to get the max,
Mhm.
which is what probably most people wanna do, cause you can still work, right?
Yeah.
And then get your Social Security full benefit. So, say you're not working and get the full benefit, do you have to file taxes?
No.
So once
Not unless
you
have
are,
some kind of other income.
other income,
Yeah.
okay, that's what
And I
thought.
think they increased it. I know when you're 62, you can make around 18,000 and not have to pay back the dollar
The
for every two.
difference,
Yeah,
yeah.
but I think once you hit 66, it goes up to like 40-something thousand, and you can make up to that.
But if you wait, I think mine's 69 and a half.
Yeah, if you go to the
If
full,
you wait, you
yeah.
can still work and get
Yeah,
the full benefit.
If you wanna wait that long. Or if you
I might
wanna
have a
work that
problem
long.
living that.
Unfortunately, it's going by quick. It's gonna be here before I want it to.
Yeah, you don't have to
Living
file.
and working.
Okay.
We have some people that, it's so cute, cause they're so,
They
like,
wanna
used to
file,
filing
yeah.
every year, that they just feel like, I feel lost if I don't at least file.
But isn't that nice? So you can get legally where you don't have to file, I guess,
Yeah.
you know.
Well, awesome. Anyone else?